All right, everybody. Well, we will get going. I show our time has arrived, and so we're going to get going. And I am glad that everybody could join us today for our webinar. We're going to have a time where we ask questions. If you have questions that come up, you can write them in the chat feature right now, or you can ask them at the end as well. I'm Ken Huffman. I'm the founder of Captive Nation. What we do is we create and manage captive insurance companies for people. And I want to give you kind of an overview of what captive insurance is and some specific things that captive insurance will cover for you. So what I'm going to do is go ahead and share my screen with you, and we will get rolling on our presentation. So a lot of people say, what in the world's captive insurance? You know, captive insurance is a private insurance company owned by the business owner. So it's not owned by a third-party insurance company. You actually own your own insurance company. And I know that sounds a little crazy, all right, but it works for business owners, all right? Here's what happened. Years ago, people wanted to start doing their own pieces of their insurance, and that's how captive insurance got going. So you don't do all your insurance through it, but you do some of it. You can shift some of the risk. It's the premier risk management tool that's available out there today. And I tell you, overall, it's just a great business strategy. It's a great business strategy. Most of your Fortune 500 companies do this. Now, small to medium-sized companies can do it as well. So what does it do for you? Well, it's going to do three things. It's going to protect your business. It's going to decrease your taxes and build your wealth. Is everybody okay with that? Most business owners like every aspect of that, right? So let's first talk about protecting your business. You want to protect the business that you built. People spend their lifetimes building a business. And so you can get protection on that so that you don't lose any of that. Now, remember, we're not replacing your commercial insurance. This is integrating with your traditional commercial insurance. And you're going to have access to policies that are not available commercially, or they're just too expensive. Now, what type of policies? There's a bunch of them. There's literally over 1,000 different ones. I want to highlight a few today that are pretty popular, okay? So one of the first ones that's pretty popular is business interruption insurance. And you think, well, I've got that through my commercial carrier. Well, you have some, but you may not have a lot, right? If they're doing road construction in front of your business, that's going to affect traffic. That's going to affect sales. And so that's something that you can get covered through a captive insurance company. You know, if they're putting in a new highway, right? And now you used to have, people used to have access to you, and now they cannot. And now your sales have plummeted 50%. Okay, file a claim and get paid. Another popular one is this, collections and receivables insurance. So what if you had, this is really popular right now. A lot of companies have gone out of business, haven't they? Well, they may have owed you money. Well, what are you going to do? How are you going to get money out of a company that's out of business? If you had a captive insurance company, a collections receivable policy, it would pay for those bad debts. And it's not just one, it's all of them combined. You can get a policy that covers all of them. We have a client this year that filed a claim for that and is getting a significant amount of money because they had that policy. So it's a great one to have. Here's another one, the commercial limits and exclusions, right? So remember, captive insurance kind of surrounds your current insurance. Basically what you're doing is you're saving money for a rainy day, right? And you get policies that fill in the gaps that you currently do not have, like this commercial limits exclusions. All your policies are going to have limits. Well, where do you pick up? What if you have a $2 million loss and it only covers $1 million? Well, that's where you would have to be able to, you're able to get something that'll pick up after your commercial insurance. Okay, so gaps, exclusions, deductibles, and things like that. So, I guess the best way to describe this, if you get your commercial insurance policy, it's a stack, isn't it? It's a stack of papers. And it's like 1 page of what's covered and 300 pages of what's not covered. Well, this covers those 300 pages. Okay. So here's another one that we all know about, right? Coronavirus and pandemics. Who would have thought 2 years ago we would be in the situation we're in? So let me give you an example. Let's say the government says, hey, you got to shut your doors, Mr. Restaurant owner. And they were bringing in $500,000 a month, and they're forced to close for 2 months, lose $1 million. If they had a captive insurance policy, they would get paid that $1 million, even though they weren't open. So that's significant value, right? What about the cyber risk, ransomware? How many times have you heard of people getting hit with ransomware? And they hack into your system. Hey, we need $500,000, or we're going to hold on to all your files, or we're going to do whatever. You can't operate, right? You're kind of held captive by them. Well, if you have a captive insurance company and a policy that covers that, you're going to get payment for that. So it doesn't interrupt your whole business, right? So very important, a very important policy. And here's another really big one. It's the deductible reimbursement policy, okay? So what you can do is increase the deductibles on your commercial insurance, and that will drive down the premiums. So there's an inverse relationship, right? And you just have to figure out, hey, how high, what makes sense? So if you have a captive insurance company, you increase the deductible, drives down your traditional commercial insurance, and then we write a deductible reimbursement policy in your captive so that if you need to grab the money for that deductible, you just grab it from the captive. Let me give you an example. Now, this is a big construction company, okay? They started a captive. Their general liability, workers' comp, commercial auto, everything all together was $2.5 million per year. Again, it's a large construction company. We started a captive. We increased their deductibles. It drove down their premiums by nearly $1 million. Now, that is some significant savings, right? So a captive insurance company is going to oftentimes lower the cost of your traditional commercial insurance, and you get even more insurance coverage. So something to keep in mind. It's a great tool to have. And there's another great benefit of a captive insurance company, in that it is creditor proof. It's very difficult to penetrate a captive insurance company because it's a state licensed insurance company. All of ours are formed onshore. All of our captives are formed onshore. And so that no one has standing. And so the law states you cannot force the liquidation of a state insurance company, which is a captive. So what you put in there is safe. So protecting your business, that's one of the first things. The second thing that people love about a captive insurance company is that it decreases your taxes, okay? Your premiums are deductible as a deductible insurance expense on the business side. The money goes over to your insurance company, and those premiums are tax-free to the captive. Wait a minute, Ken, what are you saying I get like a double deduction? Yeah, you pay once, you deduct it on the business side, you deduct it on the captive side, and you keep the money. Let me give you an example. Let's say you take a portion of your net income, $500,000. You put that to captive premiums. Your taxable income now on your business is zero. Those captive premiums go into your captive. It is premium income. But that's where there's a special rule. There's an exemption called the 831B exemption that says I can exempt up to $2.3 million per year in my captive and pay no tax on it. If you're in the 40% tax bracket, over $200,000 in savings. Do you think that could get the attention of a business owner? Whether you're a CPA, financial advisor, whatever you are, people love this aspect about captives. I'm protecting my business, but I'm also saving on my taxes. Give you an example. I call this the $1 million miss, right? So there was a CPA at the end of the year, the construction company did great. The CPA suggested, hey, go buy equipment or you're going to have to write a big check to the IRS. They said, buy $700,000 worth of equipment. They got a deduction for that, right? But what's the value of that equipment in 5 years? 200,000. A CPA that we work with got a hold of them for the next year. They started a captive. They saved the same exact, they put the same amount in, 700,000, got the same amount of tax savings, but now it's in an asset that is going up in value, not going down in value like equipment. The value of it, because you get to invest the premiums and earn even more money, after 5 years, it may be worth 1.2 million. That's $1 million miss. Do you see the value of a captive insurance company? You're creating a new asset that protects your business, decreases your taxes. Can you pull money out of the captive? You can. You're right. And when you do, you will pay taxes on that, but it's at lower capital gains rates, right? So capital gains rates, 15, 20%, ordinary income rates, maybe up to 40%, or certain states you live in, 50. So it's very, very important. How do you get money out? Every year, starting in year 2, you can get about 20% of the premium out of the captive. Again, you pay your capital gains tax, but there's some savings all along the way there. At any time, you could quit the captive. You say, I don't want to do the captive anymore. Okay. You can either liquidate, pay capital gains, or just, keep the money in there, go buy another business or apartment or something like that. Now, if you do nothing and you happen to die, your heirs will get the stepped up basis, and the heirs will pay nothing in capital gains tax. So being a CPA, I love this aspect of it. I started my career with a Big 4 accounting firm, KPMG, Peak Marwick, worked for a small CPA firm. And there I found there was a lot of tax strategies people were not utilizing, and business strategies. And this is one of those business strategies that happens to come with a great tax advantage, right? So not the primary reason why you do it. The primary reason is to protect your business, but it just happens to come with a great tax advantage. The third thing this thing does is it builds wealth. Okay, here's what's very important. When people think of insurance, they think of expense. But if you have your own captive insurance company, you get an expense on the business side. It goes over to the captive insurance side, and you keep those premiums. They become cash that you can then invest, right? And so you can invest that money. So when you compare this with like a qualified plan, an IRA, a SEP, it blows it out of the water because you're able to put in a tremendous amount more, but also you're protecting your business. That's making you all the money. It's your cash cow. Now, all the policies in the captive are reinsured. So if something happens, we're going to pull from that reinsurance. It's not a dollar for dollar deal. Okay. So we file on the reinsurance and pay your claim from the reinsurance. Now, as I mentioned before, this reduces your traditional insurance costs by adjusting deductibles and things like that. Not always. We just have to look at it. That's part of the process. One of the first things we do is we ask for the insurance policies to see what are you covered with, because we need to see, are there other things you're not being covered for? And to be able to offer that as a benefit of the captive. Now, there's another great advantage. How many of y'all have gone to Best Buy and bought a TV? What's the last thing they ask you at the cash register? Do you want the warranty? Right? That's a captive insurance company. They are offering an extended warranty. But if you have a client that manufactures anything, they can do the same exact thing. They can offer extended warranties, sell them, and all the money goes directly into the captive with a tax rate of 0. Is that value? Absolutely. That's tremendous value. So it works well. It works well. So why choose a captive? Look, if you don't have a captive, you're not being covered for these things, right? You're just kind of self-insuring. And let's use a big number, okay, for ease of figuring it out. If you had $1 million profit, you may pay $400,000 in tax. You're left with $600,000. You're not covered for business insurance, coronavirus, cyber risk, deductible reimbursement, all these things we talked about. But if you start a captive insurance company, look what happens. I move that $1 million over to here. I do not pay tax. Remember, I get that exemption. I still have that $1 million over here. Well, what's more, $1 million or $600,000? Just saved the client $400,000. Now, look what else I've got. The primary purpose, I just protected their business, didn't I? Now they have all these policies to protect their business. And again, if you don't use it, you don't lose it. With traditional commercial insurance, you write a check, it's gone forever, right? But how many times has State Farm called you up and said, hey, you know, Mary, you never used any of your insurance premiums. We're just going to send it all back to you. Well, that's exactly what happens with a captive. Okay, so you get $10 to $30 million worth of insurance, you save a tremendous amount of taxes, and you build your wealth. You're ahead, you're financially ahead, and you may have an opportunity for even new income. So again, the primary purpose is for risk management. Very important to understand and get. All the policies are actuarially supported. All right, an actuary is going to look at your business to see what you have. Each business, each captive has to be capitalized, and you have to have risk transfer and risk distribution. Very important that you have that. And that's where you get your reinsurance accomplishes all of that. Formation process, usually 30 days or less. We do a free feasibility study on anybody. If you're thinking, hey, I wonder if this would work for Joe or whatever. Here's the criteria, really. It works for any business. So it doesn't matter what they're in. If they're a physician, attorney, manufacturer, it doesn't matter. But really, they need to have revenues of about 2 million or more, not net income, okay, not gross, not profit, but their total sales of all their businesses, does it add up to 2 million? It's worth looking into at that point. So we do a free feasibility analysis, cost benefit analysis, see what it would look like. There, we're going to show you what kind of policies they could get, what the costs are. Does this make sense for them? If it doesn't, I'm going to tell you that it just doesn't make sense for them at this time. We then move to underwriting, and there we're going to get exact prices, exact policies. Then you can decide if you want to form it or not, and then we manage it as well. It's a turnkey process. We handle all aspects of the captive, so you don't have to mess with any of it. So that's what a captive insurance company is. So if you have any clients, you want to run a feasibility study, contact me. My email's right there, or my cell phone number is right there as well. Now, we had some questions. So let's see what we have here. Let's see if we can get some of these questions answered here. Okay, yeah. So if you like the slide deck, we're going to send that to you. I'm happy to send that to you. Just email me, ken@captivenation.com. I'm happy to get that to you. Hey, I'm glad you could join us today. I'm up for any kind of questions that you have. Feel free to give me a call. If you think, I wonder if this would work, what would it look like? I'm happy to visit with you. I appreciate you joining today. Give me a call, a shout anytime. Everybody have a good day. Thank you.